Cool. It's a pleasure to be here today. So thank you so much for the intro and the invite. This is the very first time that I'm talking about this specific topic. I mean, I've been in this space a long time, but this is the first. So and it's a small crowd. So whenever you guys have questions, maybe just raise your hands and kind of we'll go through it. I also hear that I might have a little bit more time to talk about this because the next speaker is slightly delayed. So please ask whenever there's anything you want to know. I'll talk about the fact that banks today are inherently extractive. So kind of as the user of a bank, kind of you're being extracted value from. That's the business model of a bank. And I'm talking about an old idea, cooperative banking, brought newly to life in the Web3 world. So not your bank, not your future. Cool. So I'll actually tell you a story today. And the story is set here in the German Confederation. I guess this is a slide you didn't think you'd be seeing today. This is how Germany looked like between 1815 and 1866. It was a federation of 39 sovereign states that had in common that they were largely German-speaking. In 1850, so about halfway through the German through this state association's lifetime, it had around 35 million inhabitants, and most of these actually lived in pastoral settings, so in towns and villages of less than 10,000 inhabitants. Germany was pretty poor, so I'm actually giving you the income distribution for Germans around 1850 here. You can see that the largest part, can you see this? No, doesn't matter. The largest part of the population made less than 100 to 150 thalers per year, because you don't know what that is. I'm giving you an alternative measurement for that, and that is the purchasing power parity adjusted $1990, okay? So this is the dollar amount that you can see below the thaler amounts. This is what we measure absolute poverty in, okay? So absolute poverty in 1990 PPP dollars is less than $2 a day. So if you live on less than 1990 PPP dollars per day, you live in absolute poverty. And you can see that that is 45% of the population here. Then you have an urban working class of around 35%. They have $2 to $4 a day. That's still pretty poor. And then you have a cumulative 20% of the population who are lower middle class, upper middle class, or elite, okay? There was no social network to kind of protect you if there was no central state welfare. So kind of like if you were out of a job or kind of you fell on bad luck, you kind of had to rely on local handouts, mostly from churches or even kind of village traditions. So kind of there used to be these traditions where kind of everyone got to kind of take home a poor person kind of like every other week for dinner. So that's kind of what you would rely on. This is a picture called the Gleaners. Do you guys know what Gleaners are? Maybe quick show of hands. Okay, the German word is Ehrenleser. Does this ring a bell? Also not. Okay, fantastic. This is because it was also new to me, okay? It's one of the most famous paintings from that period. Gleaners are people who kind of come to fields that have already been harvested and look for kernels that were forgotten, left behind, and kind of they pick them up and use them. So this is kind of the 18th century version of containering, I guess. And it is such an iconic painting because it was extremely commonplace. There were lots of people who actually were that poor, okay, as you can kind of infer from this income distribution. So imagine you are a farmer in 1850, maybe close to Munich. You work a couple of acres. It's not a lot, but it's usually enough to kind of get by. But now an unusually late frost happens and it destroys half your crop. What do you do now? Okay? And this was a pretty common scenario, okay? So kind of, you need to buy more seed, and you need to kind of plant the seed and till it and tend to it and then harvest it. And if you don't, you'll starve. there just won't be enough food. So where do you get the money to buy the seed? Kind of naively looking from today, you could say, okay, maybe you just go to a bank and kind of get a loan. But banks were in cities only, and they were only for merchants. They did not cater to people like you. They didn't even acknowledge people like you. So kind of to go to a merchant bank or a wholesaler bank in Frankfurt or Berlin, you couldn't do that. That wasn't available. What was available was local money lending. So you could go to your local money lender and borrow money. And the average interest that you would pay on a loan like this would be 25 to 40% per year. Okay, so basically you suck it up, you go to the money lender, you borrow the money, you buy the seed, you kind of plant the seed again, you till your fields, you harvest, you pay back the money lender in grain, but it's not enough, right? Because you had to pay so much that you kind of hadn't budgeted for. So kind of you enter the next year, the next cycle with a debt. And that's kind of the reality that kind of a large number of families actually lived. Kind of you were in perpetual debt slavery, effectively. Yeah, so that's kind of the scene that I wanted to set for you guys. This guy is Friedrich Wilhelm Raiffeisen. Who's heard of him before? Okay, a couple of people, that's fantastic. So he was a mayor in a small town in the Rhineland, and he said, you know what, this is stupid. I can see kind of the famine and the usury that kind of the rural population are subject to. It's not cool. What if we kind of pooled our admittedly meager resources and we kind of lend to each other instead of lending from the moneylender, instead of borrowing from the moneylender. And he had the local population create credit cooperatives. Okay, so kind of they would become members of this credit cooperative. They would kind of put their savings, small as they may be, into this cooperative. They were members and owners, so kind of they had a vote. Everyone had one vote, no matter how much money they actually put in. And then this credit cooperative would lend out money to people, to other members of the cooperative. So kind of, if you think about the farmer we just talked about, kind of instead of borrowing at 25%, the farmer would actually be able to access credit at 5 to 7%, which was then the average interest rate. Everyone voted on whom to actually lend money to and for what, so it had to make sense, so no consumer loans. You'd have to kind of use it to buy seeds or machinery or livestock. And basically it gave poor families economic agency because they no longer had to rely on these payday loans from moneylenders who kind of preyed on families like them. This went through the roof. So by 1914, there were 19,000 cooperatives around kind of the German Bund, with 2 million members. And if you kind of remember that I told you that there's 35 million people in 1850, this is actually a really large, it spread like wildfire. Something similar actually happened in the cities. So I told you 75% of Germans lived in rural settings. That also means 25% of Germans didn't. This is Hermann Schulze-Delitzsch. There's not going to be a test, so you don't need to remember these names. But he kind of came up with a similar concept for people in cities, okay? So mostly for small traders and for artisans. And he saw that they were crushed by the lack of access to credit they were kind of being squeezed by industrial competition, right? And because they had no access to credit, there was no way for them to level up. So he started a very similar initiative. He called it the People's Banks. You also had to join, you had to buy shares, then you also got a vote in whom they would lend money to. In the Raiffeisen system, there was unlimited joint liability. So if someone went bankrupt, the community absorbed that loss. This was not the case for the People's Banks, to protect the burgeoning middle classes. But otherwise, they were pretty similar concepts. They still exist today. So the People's Banks, they became the Volksbanken. The Raiffeisen, well, this is not super surprising, but the Raiffeisen banks, are still the Raiffeisen banks. And today, still 1 in 3 Germans is actually a member of one of these, okay? They're still pretty prevalent. They are also on I found this out while researching this talk. They are also on the UNESCO Intangible World Heritage list for Germany, which I find hilarious because if you look at the list, it's things like Argentina has the tango and Italy has pizzaiolo and Belgium has Belgian beer culture, whatever that is, and we have the cooperative idea. So we really leaned into the stereotype there. So and brought a spreadsheet to the party. But I think it shows how pervasive and important that idea was. It also spread throughout the world like wildfire. So all the credit unions you may be familiar with, for instance, from the United States, they're all founded by Germans who knew this concept and made it take hold in this new setting. I became a part of this story unknowingly ages ago. So I lived in California, and I became a member of the Stanford Credit Union, which, as I didn't know back then, was founded in 1959 by Stanford employees who were unsatisfied with the terms the banks were offering them for loans, and they decided to just pool their deposits and lend to each other. Funnily, it was the first bank to actually have a website for online banking. This was in 1993. Back then, I was not a customer, but this is funny because these days, cooperative banks are not known for being tech forward. Who of you banks with a cooperative bank? That's a Volksbank, a Raiffeisen Bank. How's the internet? How's the interface? Your interface is great, fantastic. I'm happy to hear that. Okay. Yeah. So why are cooperative banks typically not particularly tech forward? Well, there's a lot of them. So there's 75,000. So it's a pretty fragmented landscape. And obviously investment on IT infrastructure, it has to repay itself, right? Second thing is that just the way they're set up, they are risk averse, okay? So if you compare this idea of ownership and not, as a community, not having value extracted out of you, not being squeezed by shareholders and VCs, That idea here is super strong, but the interface typically not great, also doesn't give you access to a lot of products. So kind of I drew up a table here. So if you actually look at this, I kind of evaluate cooperative banks and neobanks along a couple of dimensions, okay? So kind of ownership and cooperative banks, this is super nice, right? Kind of you have members, you don't have customers per se. I mean, you can also be a customer, but in principle, you can be a part owner of this. And I think that's super powerful. Everyone gets a say if they want one, okay? This is not the case for neobanks. So neobank, kind of the people who kind of, who own the neobank are typically venture investors and shareholders, okay? The trust dimension, kind of you, in the cooperative banking system, it's very high, right? Kind of it's rooted in community relationship, and cooperative banks are also pretty conservative, so kind of they don't do crazy shit with them, with the deposits. So kind of this scores really highly. For trust, neobanks score kind of like somewhere in the middle. So there's no profit sharing with users, which is a nice way of saying you're being extracted value from. The value kind of typically accrues back to VC, so often kind of neobanks have very attractive initial offers where kind of you can get a lot of cash back, or kind of they give you all kinds of packs, but typically that's until you're captured and kind of you don't want to switch, and then kind of you're squeezed. That's kind of the typical playbook. On user experience, on cooperative banks, you have fragmented systems, you have legacy IT, they're slow to innovate. This is super nice in the neobanks, so kind of you have mobile-first applications, kind of like they are nice to use, they're easy to use. They kind of speak to the younger audience particularly, and they've kind of come to expect them, right? Kind of it's difficult to kind of get a 20-year-old to bank with a Raiffeisen Bank if they expect, if kind of their product expectation is Revolut, right? Okay, and then the last dimension here is agency. So on cooperative banks, you have things, you have access to product like loans, savings, insurance, obviously debit cards, but kind of it's fairly limited. Kind of like you wouldn't go to a cooperative bank to kind of hold a share portfolio. With neobanks, it's wider, right? So kind of you also have foreign exchange. So in Revolut, you can get a dollar account if you want to. You can get credit cards, which with cooperative banks usually isn't possible. But they are still very much on traditional rails, right? So kind of they are a nicer interface to the legacy stack. So kind of let's look at the things that kind of like we want to keep, right? So kind of if we kind of look at this, kind of the ownership aspect here, to me, resonates very strongly. And I think this is also something that kind of resonates strongly with people who were early in blockchain technology for the right reasons, right? Kind of this idea of kind of you can have part of the infrastructure, kind of the infrastructure is a communal good rather than kind of a proprietary one. I think this is something that kind of resonates with a lot of people. Also the trust, so kind of having this very high level of trust in the infrastructure that you're using, that's a definite plus on the cooperative banking side. But then, yeah, kind of the mobile-first sleek user experience that the neobanks offer is really kind of what you want. So what can we do with this? Kind of we take this old idea of cooperative banking and we transplant it onto blockchain technology, okay? So it's not just the idea that kind of you can make the old rails more efficient for the legacy players. So kind of letting Deutsche kind of use blockchain rails to kind of to settle international payments and stablecoins and so on. It's also the idea that this can be user-owned. This is very reasonable to kind of expect this to be built. So you're not being extracted from, the value kind of circulates somehow back to you. Trust on the Web3 stack, and I know I say this kind of like with a winking eye, because I know that kind of we are known for the worst scams and the highest value hacks. But in principle, trust is super high because, could be super high because the rails are transparent on chain, right? You can see exactly what's happening. User experience, so kind of, obviously you would have to build a proper front end to this, right? Because often interfacing with blockchain infrastructure is still too difficult for many people. So I don't know when you try to onboard someone who was not a crypto person already into the space for the last time. You may have done similar things as me and kind of like, okay, yes, you download this. Yeah, I know it's a browser extension, it looks dodgy. Yeah, I know it's a fox, it looks funny, ha ha ha. Okay, now these are your 24 words. Okay, no, don't show me the words. You need to write them down, and you can never lose them, but you can also never show them to anyone, or kind of everything's gone. And that's objectively a terrible user experience, right? So kind of you kind of building these user interfaces that are at a level at which people kind of expect them to be. This is something that we're actively working on, and I can show you some screens later to kind of show you how that currently looks. And then, for me, almost the most important thing is kind of like something that neither the cooperative bank nor the neobank actually offers you, which is, I mean, obviously you can have loans and savings and insurance and payments and FX and cards, but you can also have access to DeFi yields. You can have access to programmable finance. You can co-create the system that you're using, okay? So while kind of currently kind of your deposits kind of probably yield you on the order of 2% if you're lucky. Kind of if you want to take out a loan, you will pay through the nose. You probably pay around 4.5% to 5% at this point. So kind of you're extracted to at every corner, and here you can kind of be on whichever side of the equation you want to, but at zero spread. Okay, so this is what our app currently looks like, and I'll tell you how to get early access in just a bit. So kind of it feels very much like a neobank interface, so kind of like Revolut, Monzo, N26, whatever you use. So you create a profile. We actually, it's a safe in the back end, obviously. So kind of it's fully self-custodial, or it is as self-custodial as you want it to be. Obviously, you can have guardians that kind of, and co-signers. But in principle, kind of in the basic setup, it's fully self-custodial. It's based on the safe, which is the EVM-based multi-sig wallet that we launched a couple of years ago. It currently holds around 100 billion in various instances. It's a multi-sig, which means kind of you can switch out signers. So kind of if you lose a key, you can deprecate that key, you can rotate in a new key, which is exactly kind of what you want. Yeah, so kind of when you install it, it has 2 signers, kind of by default, but you can add arbitrary signers later. Yeah, so one is kind of the contract that we have deployed, so kind of it gives us rights to kind of do certain things to your account. It doesn't give us rights to kind of withdraw funds from your account and so on, but kind of there are certain modules that kind of we want to deploy on your behalf. This can also be removed. And then kind of there's the second key that kind of you enter through this flow. By default, this is a passkey. So kind of the passkey, do you guys know what a passkey is? Okay, fantastic. So basically the passkey holds your private key locally. Okay, so kind of it's fully self-custodial, it's all yours, but you don't have to do these are your 24 words dance. If you kind of lose access to your device or to your iCloud account or whatever, you can kind of substitute in a new passkey. So kind of it's, you can also have several passkeys, okay? Okay, then it kind of, it works like a wallet you know and love or don't love. So kind of, we currently absorb all transaction costs. It runs on Gnosis Chain. Gnosis Chain has 300,000 validators, so it's extremely decentralized. Kind of, your funds are safe. Okay, then what else can I show you? You can connect a Visa card with your self-custodial wallet. So you can pay everywhere where Visa is accepted with your self-custodial funds. You even get cash back, up to 5%. And we don't charge interchange fees. So kind of if you spend abroad, kind of you get the interbank rate of the day, which is amazing for people who love traveling. We're working on different things to kind of to extend this offering. So kind of one is investments. So things like basically money market yield. So currently yield on Gnosis Chain on euro is 3.9%. And that's the risk-free rate. So kind of this, it's more or less risk-free rate. It's just the regular Arbor deployment. Yield on US dollars is 6%. Yes? Monerium, Euro, E? It's 4.5%? Fantastic. It's gone up again? Yeah. So yeah, perfect. Yeah. So kind of this is kind of we can also give you access to tokenized stocks, for instance, and other investments that kind of are accessible online or on chain, and that's kind of what we're currently working on. So kind of bringing this idea that kind of you can co-own the rails on-chain, kind of giving you access to the full spectrum of things you can, in principle, do financially on-chain, but doing it in such a way that it's not just an infra upgrade for the banks, right? Kind of it conforms to the spirit that kind of we came in here for, right? Kind of like the idea that kind of Web3 should give you agency, should give you ownership, okay? And kind of it should give you a genuinely better user experience than kind of any one institution can give you on its own. And that's what we're currently building. We're doing user research on this. So kind of if you kind of wanna be a part of this story and kind of influence what's on the roadmap next and be signed up for early access, find our people. They wear Gnosis t-shirts. They are easily recognizable. And they will also give you a lunch voucher if you haven't had lunch yet. Fantastic. I have one teaser slide here. It's about money issuance and how money is issued today and how, in principle, money could be issued in the future. You can look at it, kind of, there's a video on about circles, but that's a story for another day. So, thank you guys.
Thank you so much for the talk, and I think we have enough time for about 2 or 3 questions.
Perfect.
All right, so, wow, lots of hands. Just start over there, maybe?
Yeah, so this is the Gnosis DAO. So kind of Gnosis is governed by the Gnosis DAO. It's kind of the entity that holds all of the Gnosis assets. Anyone who holds at least one GNO can kind of post a proposal, have people vote on it. There's obviously a quorum. So kind of it helps to kind of make some noise beforehand for the proposal. But yeah, that's where you go. You go to forum.gnosis.io and one GNO, and you can post all the proposals you want.
Thank you. At first glance, I don't see the difference to Zeal, so maybe you can elaborate. And the second one was, as you mentioned, like the transparent rails. which is kind of a bug and not a feature. So is there any thoughts about adding privacy so that I can do transfers to friends without exposing myself?
Yeah, a great question. So Zeal is also a popular wallet on Gnosis chain. So kind of it offers access to these DeFi level yields for people with kind of from their mobile phone. I'll show it to you. It's super sleek. This is targeted more towards people who are already in the space. We also kind of, I would also say that I'm not sure whether this is public knowledge in this. I mean, it's not a secret, so kind of you can look it up, but kind of we're also the main company backing Zeal. So kind of Zeal is one of our portfolio companies. It is a wallet that targets people who are already in the space. The product that we're building is for normies. So kind of the product that we're building is for people kind of, I'm not going to say your grandmother, but kind of your people, your friends kind of like who don't know or care about crypto, they should be able to use this, which is very much kind of, which is not the target audience for Zeal at the moment. Second question was privacy. Yeah, very good question. So privacy is on the roadmap. So kind of this is something that obviously kind of we know and care about. This is one of the Achilles heels of all Web3 products, and especially when you're targeting actual consumers, so normies, privacy is absolutely expected. So there are ways to kind of to tackle this. So kind of currently this runs on Gnosis chain mainnet, but in principle you can have this run in a privacy-preserving L2 on top of Gnosis chain. So this, yeah, it's on the roadmap. Kind of, we have some obfuscation techniques that will actually go into production pretty soon. So currently privacy is terrible, okay? So kind of currently when you kind of pay with your card, anyone can see that kind of a payment kind of from your card has gone to Monerium, which is kind of how it's off-ramped. They can't see what you bought or where you bought it, because kind of everything goes to the Monerium account, but kind of just the fact alone that kind of it kind of shows you all the outgoings of your account and when exactly you spend this is a nightmare, obviously. So kind of, But payback kind of like, obviously kind of for payback, kind of this is not live on blockchain, right? So kind of.
But it's like, it's sold to like whoever wants the data, right? Like I can call them today and ask for it. By looking through the purchasing history. So like,
Yeah.
I'm wondering if this is absolutely not.
I fear that this is right, that kind of most people don't care. I firmly stand in the privacy camp. So kind of we launched this without privacy, knowingly that we're launching it without privacy, because kind of the connections between Web3 rails and legacy finance, they were heavy enough lived kind of as they were. You can't build a product that is feature complete and release it, right? Kind of that kind of, it's likely kind of you'll build for 3 years and then it's dead on arrival. So kind of you launch with kind of the minimum viable product that someone wants to use, and then you kind of iterate on that. So kind of the privacy aspect, it's very much, we're conscious of it. I think in some sense, people also need to be forced into it. So I mean, I can one, and I think kind of I'm happy to kind of be prescriptive in this way. So kind of, I mean, if you look at the landscape today and you look at who uses Gmail and who uses Proton Mail, despite the fact that they are more or less feature equivalent, kind of, and both free, it's kind of, it's not even a matter of paying, right? Kind of almost everyone uses Gmail. So yeah, you're right, kind of people don't care enough about privacy, especially when it's kind of privacy from the man. Kind of when it's privacy from your neighbors, you might care. So kind of if your neighbor kind of can check on chain, kind of like what you've spent this month on your credit card, might make a lot of people uncomfortable. So yeah, we're on it. It was just that kind of you have to prioritize, and kind of making this workable for regular people, usable, useful, was priority one. Privacy is going to be next.
Amazing. A round of applause for Friederike and Gnosis, everybody.